Hi everybody, hope you're well. Just wanted to do a quick chat, have a quick chat on chat with myself on this notion, this concept, this idea that we live in a society where it's capitalism for the rich, the most wealthy, like a kind of minute percentage of the upper echelons of society live in a society of practical capitalism, whereas it's kind of socialism for everybody else. And I kind of wanted to just touch on this because these kind of suppose systems need to be more understood, as we're going to, if we're going to be able to kind of have influence. If you want to have influence in anything, you need to understand what it is. And we're obviously being ushered, we're being ushered by many super governmental and elected global bodies. We're being ushered in the direction of extreme socialism, and then the kind of inevitable end of that would be communism, like a global communism type thing. So just in terms of, I'm going to make this like real simplistic. I'm just doing it off the top of my head as well. There's no notes or anything, so it will be simplistic. Just in terms of looking at tax, looking specifically at tax and how it is that ordinary people, working people, employed people, specifically looking at, live in a system of socialism, whereas the most wealthy live in a system that is more akin to capitalism, but still is in pure free markets, still is in pure capitalism. And I'm going to, the tax system that I'm most familiar with is the UK, the United Kingdom system. So that's what I'll explain just in terms of the tax thresholds here. But, you know, if you're watching this in any Western world country, it's going to be much of a muchness and pretty much a real similar boat if you're living somewhere where you live, you know, inverted commas, in a capitalist society. Right. So here, Northern Ireland, technically part of the United Kingdom, UK framework for tax purposes. You pay income tax once you earn over 40. I'm going to use an example here. If you earn over £45,000, anything that you earn in excess over that, you're taxed in income tax at 40%. Right? So that's just pure income tax, 40%, anything over £45,000. Now, in addition to that, you pay another thing for the wonderful NHS that we're always being told on BBC News, that save the NHS is wonderful. Even though actually, if you want to get an operation or you need anything done, pretty much other than like emergency care, you actually need to pay privately, unless you want to wait on maybe like a 7-year waiting list. So that's the inefficiencies of government and the public sector we'll discuss in a different day. But anyway, we in addition to our income tax, we have to pay a thing called national insurance contributions. Now, it sort of depends, but it's in and around, it's a weird way it's calculated, but it's in and around 15%. So of your kind of monthly salary take home pay if you're an employee, on the PAYE system here. So, you know, you're in a scenario once you earn more than £45,000 that anything that you earn above that is being taxed at 40%. In addition to that direct income tax, you also have this thing called national insurance contributions, which is just like, let's just call a spade here. That's just health tax. So you've got income tax and you've got health tax. The two of them coupled together is effectively 55% on anything that you're earning over £45,000. And prior to that £45,000 additional ratepayer threshold, you pay at 20%. So it's not like you're not paying up until that figure. It just jumps from 20 to 40 once you go over £45,000. So already, that's not capitalism, because more than 50% of what you're earning is going directly to the government. It's going directly to central planners who are utilizing your earnings for, you know, and they're distributing them in whatever way they see fit. So immediately, without even looking at anything else, that's not capitalism, and we don't live in it, and we don't have it, right? But let's go on. Let's go further. So now this is the only one that you can put in as an optional one, I would say here, because in theory it is optional, but in all likelihood, if you're a person who is earning a good salary a strong salary as an employee, you'll almost certainly have gone to third level education. And the vast majority of people who do that will have got a student loan repayment and be paying it off probably for 20, 30 years, something like that, out of their salary every month. So anything that you earn in excess of £19,000 comes out at 9% of whatever you earn on a monthly basis will go to your student loan repayment. So in addition to that kind of 55% that you've got for your income tax, plus your health tax, national insurance contributions, you've got this education tax. Now it's being paid to the government. It's monthly, it's mandatory out of any pay that you earn over £19,000 pro rata per month. So in effect, that is just a student loan tax. Let's call it what it is. So like what are we looking at there then effectively? Well, I'll not just add it directly to the 55% already being charged, but because it's only over £19,000 equivalent, so it becomes a bit messy. But there's just another fat old tax that you have to pay, right? If you're looking to work and earn as an employee. Now then, let's think. Now you've got your take-home pay, effectively, right? Whatever's left is your disposable income. Now, like most people, you want to buy a house. If you have to buy a house, with the exception of now, because they've temporarily try to prop things up and not let a big massive house market crash kind of unravel, and to try and artificially stimulate a little more demand in the property sector, let's say, they've temporarily put a hold on this thing called stamp duty tax. But we have a thing called stamp duty tax, whereby over a certain amount of value of a house, you have to pay 5% of the value of that deal, of that house being sold, to government, and it's called stamp duty tax. So it's not, people just call it stamp duty. That's what it's called, stamp duty. But let's be real, it's a property tax. It's a one-off property tax on a house that you want to purchase, right? In addition to that, you have to pay your rates. So if you own a house, it's a thing called, it's just your rates. It's not another tax, it's your rates. No, it's just a property tax. It's called rates, right? And all that effectively is you're paying your rates, you're paying your property tax for little more than the bins, your garbage, your waste disposal being collected, and street lighting. That's pretty much it. A fly has just flown in here. If I was faster, I'd kill it very quickly. Damn it. Hope it's not too loud. Anyway, right, so your rates, your property tax. Now, it's slightly different. You can't work it as a percentage of your pay because it depends on the value of your house. But I think on average, it's something like £150 a month, £100 to £150 a month. Most people are on average, the people are paying in rates in this nothing property tax. So you've got that, right? Then if you want to, say everyone pretty much wants to get a car, and in this ridiculous world that we're living in at the moment, between 85 and 90% of all cars in the UK are bought using financing rather than with cash. So people are paying this off monthly. And if you want to use that car, probably the most heavily taxed thing in the world at the moment is petrol, diesel, gas. So once you add up all these taxes together, you realize that we are living in a system that is in no way resembling capitalism. Now, bear in mind, capitalism is effectively free markets with minimal, if any, government interference. Meaning, therefore, that there's little or no tax, because government, if you think about the government, right, where does government get money? Now, it doesn't produce any assets itself. The only way in which government can get money is A, directly by taxing you, or B, by borrowing. And the effect of borrowing is effectively that there will be further inflation for you to pay and the way that comes about is just basically you're paying more for your goods and services in months and years to come. So that's it. There's direct taxation and there's indirect taxation by way of inflation. That's the only way, through borrowing. That's the only way that government get money. So if you look at like 1800s, late 1800s in America, in the UK, in Ireland, You have scenarios which are much more akin to capitalism because the government intervention was much more of like a traffic warden type thing, type deal, rather than this incredibly invasive, tyrannical body, which is taking all your money through direct taxes, all these stealth taxes, all these taxes with different names, which don't suggest that they're taxes, but they're taxes. And whenever you couple all those together, you come into a scenario like we're in now, where ordinary people effectively, in effect, because like it's not like labels are just labels. You have to like look through, well, what is it that this is what I earn, this is where it goes. Flip the government, flip. Whenever you actually jump through all those hoops, you realize that they pretty much take what, 70, 80, 90% of your pay. Whenever you actually take through the money that you have the whole way through to actually spending it. And even then, if you want to spend it, say, in investing, and you do earn a certain amount of money, now there is a small entitlement that you have to having paying no capital gains tax, but over a threshold of, I think it's £12,500, you have to pay capital gains tax, and anything that you might earn shares, say, at like 20%. So there's a capital gains tax as well. Now, flip that over to the most wealthy. Well, the most wealthy, who will be, like, if you think of the richest people that you can think of, right? TV kind of people that you've seen on the news all the time. I'll not mention names or anything, but for the most part, these people will be owners of large scale businesses, public limited companies, major shareholders in them. Now, here in the UK system, corporation tax is 19%. And that's it. 19%. So if you're thinking of an ordinary person working as a, say someone who's done really well, a high-level doctor or something like that, who's being paid by the NHS here, and they've done a great job. They're doing incredible work, life-saving work. They've had to go to university for 5 years just to do their undergrad. They probably have to specialize. They probably had to do crazy night shifts in places that they didn't want to be in different, parts of the country, just to gain that experience. And then years pass. Then they get to a scenario where they're on 80 grand, more, whatever, less, maybe, whatever. But yeah, you get the scenario where they're they've done all their work and they've got to this stage in their career, and they're in a scenario where they're paying 45% income tax plus national insurance contributions plus all that. And the way they twist it, the way the media bias goes in these debates, and things like this, it always ends up being like, oh, you got to tax those higher earners more. They should, take the burden more. Whereas we're all squabbling between each other. The reality is those who are actually proper elitely wealthy, they're just paying corporation tax, and it's 19%. And here's the funny thing, here's the kicker. They don't even pay corporation tax at 19% because in all likelihood, most of these corporations structure themselves in a kind of multinational way where they have branches and bases in different countries like Ireland, where they can effectively pay nothing or next to nothing in corporation tax. And there are different ways in which you can pay yourself dividends as a business owner, even a small business owner. And there are much, much better tax breaks, like substantially better tax breaks than there would be as an ordinary employee. So that is how, just looking at tax, just simplistically breaking that down, that's how we don't just live in one, you can't just put like one big label banner on, oh, we live in a capitalist society. No, because the practical realities are that the ordinary working person, employee, working class, middle class, it's all the fucking same. Ordinary people, in effect, live in a socialist society. And it's propped up by the fact that there are such artificially, historically unprecedented, unique, and will not last forever low interest rates, whereby people can get on the property ladder temporarily, but hey, fixed rate only lasts for many years, and then who knows what's going to happen. Eventually the rates will go much higher and people won't be able to keep up with repayments. What happens then? You're completely at the whims and mercy of the government. And it's sort of similar with car payments. Everyone's just jacked up on car financing Literally, it's broken records recently where it's something like it's between 85 and 90% of cars are owned here on finance as opposed to being owned outright. So it's crazy and crazy world we're in. But next time you hear people saying, it's capitalism's fault, we don't have capitalism. If we did, ordinary people would have much, much, much less to pay in tax, if anything. As a result, you'd have much more disposable income. You'd have much more autonomy over your life decisions, economically especially. Life would be better for the ordinary person across the board. Capitalism is what we need to be striving towards. It's not something that we've had in a very, very long time. Don't let the labels and the banners fool you. Anyway, yeah, different one. Hopefully there was some benefit. Sorry for I should put this on. The insanely long hair. Just got a shower and it's fluffing too much, let's say. Anyway, much love, God bless. Keep the faith.